Welcome back. Amazon's IPO debuted 20 years ago, and if you did not invest now, you missed out on a big return, a $10,000 investment in the stock. 20 years ago, it would be worth $4.9 million today, according to the Wall Street Journal. On the panel this morning, Diversified Financial Consultants President Dominic Tavella. Dominic, at $460 billion, Amazon now boasts the fourth largest market cap in the S&P 500. Pretty incredible.
You know, Maria, what's really amazing is that this started out as the Earth's biggest bookstore. So we talked earlier about reinventing yourself, right? This started the online bookstore, and as recently as 2008, this was a $37 stock. Okay, it reinvented itself. It's becoming the world's largest retailer, and it's this reinvention that has allowed the stock to explode, earnings to explode, revenue to explode, and it's justified.
You know, it's funny. I owned that stock when it was the world's biggest bookstore because I love the convenience of it, and then I thought, this is going to kill the bookstore, and I love books, so I sold it. Starting it off, you know. But it is amazing with the reinvention on where they're going. And I think you made a point earlier about how they're going in bricks and mortar when everyone else is trying to go online. Wait, I mean, how do you look at a stock like this and say, or all of these companies say they're reinventing themselves in the right way?
Look, if we all had a crystal ball that actually worked, this would be easy. The problem is you're throwing a dart against the wall, and you're hoping the one you have in your hand is actually the one that's going to work. It's the exception, not the rule. We all know that.
This stock has gone nowhere but up since going public. Would you put new money to work here today after the huge run-up we've seen? Does this have more legs to it?
If it continues down the path that it's been going, which is this reinvention and expansion, and we talked about getting into the supermarket business, we're talking about now getting into the furniture business.
Drones.
It's drones, delivery systems, buying its own airplanes. It's recreating itself every day. If the revenues are there, if the profits are there, then the price is justified.
But that's a good point, because profits haven't always been there, and there's still a question about profitability. But the revenue is, and for some reason, investors were, over this whole run, not caring that the company hasn't really generated much profitability.
You're absolutely right, Maria. For the longest time, it almost purposely wouldn't generate the profits. It was taking those earnings and dumping them back into the company and growing it. Finally, they decided to turn the switch on, and the stock has gone through the roof.
How much credit do you give Jeff Bezos? Because we focus on these tech companies and the leadership that they're under. And he's been able to disrupt industry after industry for 20 years. What does Amazon look like under a different leadership?
Think about how much criticism he got for not putting profits first, by taking all that revenue and putting it back into the company.
It's true. He did take a lot of heat.
A lot of heat, and all of a sudden he wakes up one day and hasn't done so bad for himself or his company or his shareholders.
Not so bad.
This is total category disruptor, first in the bookstore, then in retail. Are there other companies you're looking at right now that are totally disrupting categories that might be a good buy at this point?
Well, and again, I'm not recommending any of these stocks, but you look at what Uber has done, right? Completely disrupted the transportation system. Airbnb, completely disrupting the hotel system. So there are companies coming in, and they're creating a new world in terms of commerce, but making it successful and being successful 10 and 20 years down the road, that takes something special.
But there's also some old-style companies like a Ford Motor, for example, that is completely retransitioning itself. It's not a vehicle company anymore. It's calling itself a transportation company. They're talking about driverless cars, and they're talking about, you know, just transporting people like an Uber of itself. So they're trying to disrupt themselves.
They're trying. They have to. They have to adapt to the new world and reinvent themselves. And Ford, you look at, I've driven a Ford car recently. I was genuinely surprised at what a good quality car it was. Genuinely surprised, in all fairness. But the stock price had a rough time of it.